The Strait of Hormuz is one of the most important oil routes on the planet. Roughly 20% of global oil supply moves through that narrow passage. Any disruption there immediately affects energy prices worldwide. We've already seen oil spike sharply in response to recent developments. When oil jumps, inflation fears return. When inflation fears return, central banks react. And when central banks react, financial markets move. Stocks, bonds, currencies, and yes, crypto. But here's where things get interesting. Higher oil prices increase import costs for countries like Japan. That can strengthen the Japanese yen as capital flows back home to cover rising expenses. When that happens, it can unwind what's known as the carry trade. That unwinding often creates volatility across global markets. Risk assets tend to feel pressure first. In the short term, that kind of uncertainty can create downside volatility for crypto markets, including XRP. We may see sharp swings. We may see emotional reactions from traders. That's normal during global stress events. However, long-term is a different conversation. Moments like this expose weaknesses in the traditional financial system: slow settlement times, heavy reliance on correspondent banking, cross-border friction, currency instability. These issues become obvious when global risk spikes. That's where blockchain infrastructure enters the picture. Ripple has spent over a decade building institutional relationships and cross-border payment rails designed to move value quickly and efficiently. XRP is positioned as a bridge asset that facilitates liquidity between currencies. In times of global instability, liquidity matters more than ever. If oil volatility triggers currency shifts, capital controls, or tighter banking conditions, institutions will look for faster and more flexible settlement solutions. That's the long-term thesis many XRP supporters believe in. Now let's be balanced. In the short term, markets could remain choppy. If US equities open lower and risk sentiment weakens, crypto could experience temporary pressure. Bitcoin often sets the tone and altcoins follow. But here's the key. Uncertainty eventually becomes priced in. Once markets adjust to new geopolitical realities, capital starts rotating again. Investors look for growth. They look for innovation. They look for infrastructure plays. And that's where digital assets with real-world utility stand out. The regulatory environment in the United States is also evolving. Policy discussions around digital asset clarity continue to move forward. If clearer frameworks emerge, that could act as a catalyst for institutional participation. So what's the takeaway? Short term, expect volatility. Medium term, watch oil, inflation data, and stock market reaction. Long term, infrastructure projects with real adoption potential could benefit as global finance modernizes. This is not financial advice. It's strategic positioning in a rapidly changing world. If you believe blockchain adoption accelerates during systemic stress, XRP becomes part of a much bigger story than just daily price action. Let me know your view. Is this global event a temporary shock or the beginning of a structural shift? If you found this analysis valuable, subscribe to Wealthory AI for data-driven insights on crypto, markets, and the future of money.